Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Do North Carolina and South Carolina have tax reciprocity? This is a critical question for the thousands of people who live in one Carolina and commute to work in the other. Tax reciprocity is an agreement between states that allows a resident of one state to work in another and only pay income tax to their home state, which greatly simplifies tax filing. So, let's get right to the answer for the Carolinas. No, North Carolina and South Carolina do not have a tax reciprocity agreement. This means if you live in one state and work in the other, you are generally required to file two separate state tax returns. But don't worry, this doesn't mean you'll be double taxed on the same income. There's a system in place to prevent that, and it's called a credit for taxes paid to another state. Your home state, the one where you legally reside, will give you a tax credit for the income taxes you were required to pay to your work state. Let's break this down with a common example. Say you live in Fort Mill, South Carolina, but your job is in Charlotte, North Carolina. Throughout the year, your employer in Charlotte will withhold North Carolina state income taxes from your paycheck. When tax season arrives, your first step will be to file a North Carolina non-resident tax return. On this form, you will report only the income you earned while working in North Carolina and calculate the tax owed to that state. After you've figured that out, you will then prepare your South Carolina resident tax return. As a South Carolina resident, you must report all of your income to the state, regardless of where you earned it, so that Charlotte income goes on this return too. Here is the most important part. On your South Carolina return, you will claim a credit for the taxes you already paid to North Carolina. This credit directly reduces the amount of tax you owe to South Carolina, ensuring you aren't paying full state taxes twice on the same earnings. The same principle applies if the situation is reversed. If you live in North Carolina and work in South Carolina, you would file a non-resident SC return first, and then file your resident NC return, claiming a credit for the taxes paid to South Carolina. So, the key takeaway is that while it involves more paperwork than a simple reciprocity agreement, the tax credit system prevents double taxation. You'll file in both states, but your home state gives you a break for what you paid the other. Keep in mind that tax laws can be complex, so this information is for educational purposes and it's always best to consult with a tax professional for advice specific to your financial situation. Thank you so much for watching this video. If you found it helpful and clear, please give it a thumbs up and be sure to subscribe to our channel for more easy-to-understand explanations on tax and finance topics. If you have a question or a topic you'd like us to cover next, please leave it in the comments below.